Back, we're watching crypto prices, which are rising across the board, along with equity markets today. Bitcoin is hovering around $40,000. The gains coming despite a major crackdown on illicit crypto activity. The Secret Service reportedly seizing more than $100 million worth of digital currencies in connection to fraud-related investigations since 2015. According to NBC News, Secret Service agents are tracking the illegal activity along the blockchain, and they have found that criminals transfer stolen Bitcoin and other cryptocurrencies into stablecoins. Brad?
The International Monetary Fund, known in your group chat as the IMF, released its report on global financial stability and has issued a significant warning to cryptocurrency transactions. Joining us now to go deeper into the report findings is Tobias Adrian, who is the IMF head of monetary and capital markets, and also here for the conversation, we've got Yahoo Finance's Jennifer Schonberger. Tobias, just to help us set the stage here, the headline from the report, it alludes to Russia's unprovoked invasion of Ukraine and subsequent punitive economic sanctions from countries as the reason that the financial system's resiliency is being tested at a time when the global economy was still attempting to recover from the pandemic. So do policymakers have the adequate tools to counter economic threats?
Yeah, so far, so good. The global financial system has been tested on two fronts. One is the war in Ukraine with the associated very sharp rise in commodity prices and the temporary risk-off that we observed in early March and late February. The other shock is, of course, the rise in interest rates due to the tightening of monetary policy by central banks. So far, the global financial system has been resilient to those shocks, has been able to absorb them, and pricing is fairly well differentiated across countries associated with economic fundamentals.
Tobias, Jennifer Schonberger here. It's great to see you. To your point, the Fed is underway with its rate tightening cycle. We are expecting a 50 basis point rate hike in May. And because of that, we're continuing to see volatility. My question is, how much of the rate hikes have been factored into the markets at this point? How much adjustment do we need to go? And what does this mean for crypto, which has basically been holding in that 40,000 range as far as Bitcoin is concerned? Do you see the potential for systemic risks to be unlocked as the Fed goes down this rate hiking path?
Yeah, we think that the policy of the Federal Reserve is appropriate in order to fight inflation. Inflation is well above target, and an aggressive rate hiking cycle has to be deployed in order to get inflation back down. So we think that the approach of the Fed to raise interest rates and to be very, very data dependent in terms of how the economy evolves, how the inflation picture evolves, is exactly the right strategy. Now, we could, of course, see further sell-offs across asset markets. The reason is that the intended consequence of monetary tightening is to tighten financial conditions so that real activity is slowed down and inflation can come down. So at some point, we could certainly see some readjustment of valuations across risky asset markets, including in stocks and bonds.
Tobias, to follow up there, you mentioned the tightening of financial conditions, which we're seeing already. Asset prices are resetting, and the IMF just downgraded global growth today. What sorts of systemic risks, what are the gaps here that you see for the crypto space? I know that the IMF has been warning about the spike in trading volumes for cryptocurrencies in emerging markets.
So we have called for a comprehensive, globally coordinated regulatory approach to crypto assets. In our view, there should be more regulation of the infrastructures that have become so important in crypto space. So those are the access points, the wallets, and the service providers that most participants in crypto asset markets are using. Those should be subject to investor protections, prudential regulations, as well as identity verification systems. There is movement in the right direction, but more of a globally coordinated approach is necessary here.
Within digital assets, what's the IMF view on stablecoins or even central bank digital currencies that we've seen discussed or white papers authored, even by the Federal Reserve earlier this year?
Yeah, well, central bank digital currencies are, of course, explored by over 100 countries around the world at this point. Some countries have already launched their own central bank digital currencies, such as the Bahamas. Others are doing experiments, such as China. And many countries are looking into whether they should launch a central bank digital currency. Now, concerning stablecoins, in our thinking, we recommend more regulation. Some of the stable coins are more bank-like, other stable coins are more like money market funds, and in either case, they should be regulated accordingly.
Tobias, we've seen an uptick in crypto trading in emerging markets, and a lot of that has been speculation by individuals in those markets. But what is the prospect of those countries adopting crypto as an actual payment, of course, outside of China, which has banned crypto? And what sorts of challenges could that make for policymakers, given how fragmented crypto payment systems can be?
Absolutely. So we see some countries where crypto activity is very large, and that makes it more difficult for the central bank in that country to have independent monetary policy, and capital flows can be associated with the crypto trading. So that's a particular challenge for emerging market policymakers in some countries. Now, there's one country that has adopted Bitcoin as a national currency, and that poses a whole set of new challenges. In our view, the very strong volatility of Bitcoin makes it into an asset that is not very good as a national currency.
Tobias Adrian, who is the IMF head of monetary and capital markets, joining us, and Jennifer Schonberger, Yahoo Finance's own. Thanks so much for the conversation.